Okay, let's go across to a very special market guest, Dinshaw Irani of Helios Capital with us to try and understand how is Helios thinking about the market landscape currently. Dinshaw, great having you. Good morning. And at the outset from all of us out here to you and yours, a very happy Diwali and a prosperous New Year. Dinshaw, can you hear me? Okay, I think we've got an audio issue. Can you? Yeah, I think you're on mute by any chance, Dinshaw. Could you just check if you're on mute? Okay, now we can hear you.
There you are. No, I'm not.
Now we can hear you.
Okay.
So festive greetings.
Festive greetings to you and the viewers too, and your team also, Neeraj. And thank you for having me on your show. Let me tell you, this is the first time I'm doing a show at 8:15 in the morning. So probably a nice way to end my Samvat, I suppose. But anyway, so as I was telling about the markets per se,
please continue.
I actually believe that we are not have done anything on the large cap front anyways. I mean, you look at the market cap of Nifty 500, which is around $5 odd trillion, and if you look at the 2/3 of the market cap of Nifty 500, which is accounted by roughly around 120 companies, the valuations are still at 19 and a half times forward earnings. So basically, the large caps haven't done anything. Even if you look at from the angle of the performance of indices. Nifty 50 year to date is up probably 11.5% odd. And last 3 years, the CAGR is what? 11-12% odd. So we're not even there. So our feel is, unfortunately, the quarters haven't been too good, starting from, say, March onwards. June was a bad quarter. I think September is looking worse than June. But going to December quarter, I think that's where you may see some kind of a revival happening in the large cap space, per se. Already the numbers by the private sector banks are pretty good. IT has been reasonably good. So there are pockets where disappointments have happened, but I think we are still far away from the markets achieving new highs. I'm putting my neck out.
Good to have the neck out. Far away from markets achieving new highs. Though the question is, can the consumption issues, Dinshaw, hurt the market sentiment near term? And near term is what everybody's worried about. The longer term seems reasonably clear.
Consumption has been a bit of a dampener, I think, for our markets. I mean, especially given that the rural was already suffering. Now urban also has backed off. But I believe that's because of the way the liquidity in the system is today. I mean, there's a lot of crunch by banks to raise deposits, and as a result, they're very reluctant to give out credit also for consumption phase, the unsecured credit, as you will. And then the regulator also has been coming down quite heavily on the banks. I think if that eases out, and my feel is that it'll ease out probably by the March quarter per se, because RBI, frankly, is trying to fight a very strong dollar, which is again strengthening against all global currencies, leave alone India. So I think that is where the issue is. And maybe once that happens, you'll see consumption also kicking in. However, as I said, there are pockets of positive news. The banks have, the good franchisee banks where you've seen that the credit quality has been, the loan book has been pretty strong. As the quality of the loan book, they're doing fairly well. IT continues to do well. Pharma looks pretty interesting as such. So these are the pockets, and plus high-end consumption. In fact, I was just reading up before I came on your show. Look at the way the gold has taken off during Dhanteras, though the quantity is lower, but the values are much higher than what they did, or the car sales which happened over Dhanteras. So I think, and also that's premium cars, by the way. So you can imagine the high-end sales are pretty okay. Same is the case in the FMCG space, where the premiumization continues. But unfortunately, volumes aren't picking up. But my feel is that's probably this quarter, December quarter, when you see that the base of the last December quarter already is becoming lower, you'll see some kind of semblance coming back.
Sure. What are the stocks and sectors you're excited about right now? Are you also on the banking bandwagon right now? Are you excited about what you've seen, for example, for Marico?
No. So basically, banking, by the way, we've been around, we've been fairly bullish on banking for a while now. So it's not that we saw something, jumping on a bandwagon as such. But the fact is that our belief is not only banking, but even services within the financial space. basically the wealth managers, the exchanges, the demat guys, RTAs, so RIA, sorry, and all that. So these guys are the ones which will really benefit with a growing economy, with a growing per capita, because these are the ones who are gatekeepers to wealth as such, if you will. And that's why we believe that that and the private sector banks should do better. Why I'm saying private sector banks is because consumption is the way forward. And obviously, these guys are the ones who are the consumer financiers. I mean, financiers consumption as such. So these are the sectors that we bullish on. Apart from that, we are also bullish on IT. Everybody thought it's going to be a soft landing, whether it will be a hard landing in the US. Our belief is that there's no landing at all out there. If anything, they're just on a very smooth flight path as such. And that's a very healthy sign because that's the largest economy in the world today. The second largest economy is not doing too well. That is China I'm talking about. So you needed one to fire. And hopefully US continues to fire. And that's why I think the outflow from India, I believe, is more towards US than anything else. So, and these are the few sectors that we are fairly comfortable with.
Samina, happy Diwali, happy festivities to you and your family. Thank you for joining us this early morning. What did you make of the auto sector? They've had it quite rough. Commentary is not sounding very promising, and all that hope spreading on the festive season seemed to be a little overdone. Things not playing out the way we would have liked or they would have liked for now.
So, Samina, I think the excesses of the last 3 years are giving way now in the auto space as such. Frankly, I mean, we were not too comfortable with autos anyways, and that's why we never had any exposure to autos. Our reasons were different. We always believed, and we do continue to believe, that EV is going to be a big competition, a big disruptor. Probably hydrogen will be the winner ultimately, but that's a long way off. Our belief is that there's a lot of disruption happening in that space, so better stay away from that space. Plus, one saw that, as I said, the excesses of the last 3 years, mainly because of the pent-up demand and people wanting to spend. I think entry-level vehicles is a total giveaway, right? I mean, there's nothing happening there. In fact, Maruti came out their results yesterday, and they also said the same thing as such. So that's why I think that space will be under pressure for a while. Though maybe the SUV space or the hybrid space may continue to capture market shares, but at least the entry-level vehicles or the low-end vehicles will definitely continue to suffer. And that's why, unfortunately, the largest listed player in that space is on the entry-level vehicles, and that's why we're not too comfortable with that space today. And I don't think we will be going into the future also. My belief is, as someone asked me earlier, that every time there's the sector rotation happening, I think this sector, which did fairly well for the last couple of years, is the one which is rotating downwards now.
Broaden the conversation a little bit because, signals are so mixed, right? And I think investors really don't know how to play this market. Last month was tough. Last week was tough. Everybody was complaining about valuations, FI flows, disappointing earnings, troublesome macros. I mean, the list of problems was endless. Suddenly, come Monday and Tuesday, when you see a technical recovery in the market, valuations look healthy, earnings have improved, festivity is back. What does one do? I mean, portfolios are still lower, and it's also very confusing because I don't know what to play, and I guess both are right, just depending on the time horizon, right? So very selective in that sense. But if an investor is watching you right now, would you recommend him to buy sectors in this current dip? And if yes, what specifically would you allocate money to? Or do you think there will be a better opportunity, better time in the next 3 to 4 weeks?
The problem is the last 3-4 weeks. It's not been the year, right? I mean, if you look at from Samvat to say till day before, the markets were up. The Nifty was up 25% or so, and I think the mid cap, small cap was up 35-36% or so. I'm talking Samvat to Samvat, right? Unfortunately, October has been a very bad month, and that's why that has spoiled the mood for everybody. Our belief is that was healthy. You needed that kind of a correction for the guys on the sidelines to come back. The FIs were sold to even start looking at India per se. And by the way, my feeling is the FIs didn't sell because they wanted to get into China. And the glaring data point is that India saw us outflow some 10.5, 11 odd $11 billion month to date. But China also saw an outflow of $11 to $12 billion. My feel is there was basically a trade happening for the US, and we call it a Trump trade today, because everybody believes that Trump will come back there. And if he does, there's a cut in taxes, which is a very healthy sign for the markets to react upwards. So maybe you'll see a buy on rumor, sell on news kind of a feature happening out there. Probably November 6th or 7th is, I think, when the results are out. But there's always a problem there in terms of results because they keep continuing dragging till the president is elected. But my feel is that once that happens, you'll see money flowing back into India. Coming to the sectors specifically, my feel is that, as I said, that large caps will definitely, I mean, on looking at the cap-wise basis, large caps have done fairly well. Even today, I mean, the results of the large caps have been fairly decent results. There have been pockets of disappointment, as you rightly pointed out, in the consumption space and the auto space. But apart from that, there's been fairly healthy signs coming out as such. You saw there some few players in defense reporting, you saw the IT guys reporting, you saw the private sector banks reporting. So these have done fairly well. Looking at sectors, let me kitchen sink it for you, because our belief is that private sector banks, financial services, probably NBFCs for the time being will take a backseat for a quarter or so. But these are the two major chunks in the BFSI space. Obviously, insurance will continue to do well. Coming to IT, as I said, that I don't see a soft landing or a hard landing. I see them in an even flight path in the US. That's very healthy sign for India. In fact, if you've seen the big seven of the NASDAQ, they're doing fairly well in terms of even revenues and in terms of the profitability. That's good news for the Indian IT services because these are the guys who are servicing those guys as such. So that is the healthy sign. So IT continues to be our favorite today. By the way, we turned positive on IT in July. And from then onwards, we've been fairly bullish on IT. Pharma is another space. But here you have to be selective because we're looking at CDMO guys or the domestic pharma guys, which are going to do well. The US facing guys will have a problem. I mean, once if Trump comes in, there's obviously a reset happening in that space. So better to avoid that for the time being and then take a call later as such on pharma. Capital goods, again, selectively, you have to be fairly clear. Domestic capex is what you're looking at. China plus one will take a while to take off. So that's why the PLI guys and all you've got to be wary of. But obviously, the domestic space is something which is exciting us. Defense, you can be selective out here again. And obviously, I think the budget will be a big way forward for the defense space once that happens. So these are the few sectors that we are fairly bullish on. Even the consumption space, we are only in the high-end consumption, say hotels and tourism and stuff like that. That is where we think the real...
What is your one big Diwali idea? Since we're all so festive this morning, you have to give our viewers one big Diwali idea.
I won't give out a name per se, but I think the new age platform companies, they are going to be fairly exciting. I mean, you've seen their results, you've seen them performing fairly well. In fact, one of the platform companies had a regulatory issue, which it overcame very well. And after that, he's been getting these positive signs from the regulator also, giving approvals.
Are you excited about the IPO of a new age platform company?
We definitely are. So let's see how that goes. Because I think India has got enough and more on the table for both these guys to survive as such. I'm talking about the food delivery space per se. I believe you were talking about the same.
Certainly. Dinshaw, my final question to you, because there is a consensus out here on the platform businesses. The other consensus seems to be capital marketplace. And since you're not listed, I can ask this to you because you don't have a bone to pick here. Do you believe the next 5-year story, the capital marketplace, whether it's brokers, AMCs, utility companies, or exchanges, all of them have a higher probability of returning very positive returns to shareholders?
Yeah, I agree with that, Neeraj. As I call them the gatekeepers to wealth. And that's why I believe with per capita moving up, there's no way you can avoid these plays in the market. That's why the financial services looks fairly exciting. I don't know about the next 4 or 5 years. My feel is that on a longer term basis, and even beyond that, if Indian GDP keeps growing the way it is, and the per capita keep moving up the way they are, I think these are the plays that you want to be in. And for a structural growth story, that is where it is. Even now, I mean, I can see it whenever there's a correction in the market, huge amount of flows coming to the AMC companies. including us, obviously. So it's obvious that there are a lot of people on the sidelines who are waiting to come into the market. So we've still not even seen the tip of the iceberg, I believe. Long way to go.
Thank you so much, Dinshaw, for joining us, and wish you a very happy festive season once again. Dinshaw Irani there of Helios Capital saying that the new highs in the market are yet to be achieved.